Welcome to Business Talk, a new online business talk show which is presented by Business Tech, one of the largest business news websites in the country, hosted by me, Michael Avery. And so far, we've already received a very warm welcome by the market. Fantastic to be pioneering in the space and in a series where we're going to be sitting down with high-profile business leaders to talk about the impact of the lockdown and one of the world's longest lockdowns anywhere, and a way out of the mess for prosperous South Africa. Not only the impact of the lockdown, but what life looks like post-lockdown, how companies are going to adapt, and what can be done to create a thriving economy. Well, my next guest is one of the most outspoken and highly respected economists in the country. He sits on the board of the Efficient Group. He's been a member of the Tax Advisory Committee of the Afrikaanse Handels Institute, as it was called. It's now the Small Business Institute, and he has represented business at NEDLAC as well. Dawie Roodt, always a great pleasure to chat to you, but specifically now at this time, when I think every cabinet minister should have that slogan, "It's the economy, stupid," emblazoned on their office walls. It was the phrase coined by James Carville back in '92. Yeah. And because we're talking about US elections at the moment, I thought it would be apposite to start on that point. And, you know, Carville's phrase was really directed for a campaign that sought to focus the attention on the economy. We've had the mini budget recently. We've had the economic recovery and reconstruction plan. What do you make of those two together in terms of setting us on a new path for growth in South Africa?
Always my pleasure, Michael. Always nice talking to you. I think before we get to that, maybe it's important to understand that we were in very, very deep trouble even before 2020, even before we've heard of a place called Wuhan. For the past 5 years, on a per capita basis, the average South African has been getting poorer every year. We were, in fact, on our way to a so-called fiscal cliff before 2020. So we were in very, very deep trouble. Then it was the lockdown, and also a very important point to make, it's not the virus, it's the lockdown that is causing all this damage. And I can give you all sort of numbers, but I think it's going to happen to the economy in 2020, but it's not a pretty picture, I can assure you that. And of course, the politicians understand this, they know this. We've got the Minister of Finance trying to somehow steer the fiscal accounts through this disastrous economic environment in which we find ourselves. And we also have the president trying to get the economy going with his economic growth plan. So maybe on the fiscal accounts, let me make 1 or 2 comments. But before I get to that, perhaps a political comment. The Minister of Finance in June, with his emergency medium-term statement, he did draw a line in the sand saying that the state debt levels will not exceed 87% of GDP in 3 years' time. And now he relaxed that specific number, and he said, no, it's going to be a 95% in 5 years' time. Now, I've been doing the fiscal accounts for many, many years, and I can tell you it's not going to be for 95% in 5 years' time. It's going to be well in excess of 100% in 5 years' time. But the reason why I mentioned this.
Why do you say that, Dawie? Because I think the market didn't believe the 87%. They've looked at the 95 and said, maybe that's slightly more realistic, so we can look at this slightly more credibly. Why do you say now that it won't even be there? It's going to be over 100?
For various reasons. I think for this year, for example, the current financial year, which is going to end at the end of March next year, the minister's estimates for economic growth is about 7.8%, if I remember correctly. He's talking about of a fiscal deficit, I think about 16% to GDP. He's talking about fiscal debt levels of just below 82%. I think all those numbers in this year will be exceeded in any event. So he's starting off at the worst point even. My estimates for the revenue numbers is that the revenue will come in about 330 or so below budgeted estimates. The minister is working with about less than 320. So just about on all the levels, I don't think we're going to get to 95% of GDP. But more importantly, we could have achieved this, perhaps not 87%, maybe 90% or so, if Tito Mboweni was allowed to do what he wanted to do. It is very clear. I mean, he made comments like, for example, on South African Airways not assisting the state-owned enterprises anymore. And so, but I think what I want to say is that clearly to me, there was a political shift in cabinet. I think Tito Mboweni is sidelined. I think the budgetary process has been moved to the union building. I think the president, and that's clear, the president is much more involved in the whole budgetary process. He's in charge of treasury. And where the Minister of Finance used to be a very senior minister, that is certainly not the case anymore. And I've got a suspicion that Tito Mboweni is not going to be around for very much longer. So there was a power shift in cabinet. but there was an ideological shift in cabinet as well. And if you look at the plan of the president, we can go through the whole thing, and of course, it is pretty much centered around infrastructure, and he wants to create nearly 1 million jobs over the next couple of months, which is not impossible. But my problem is that politicians quite often confuse jobs with keeping people busy. This is not a job creation plan. This is a keeping people busy plan. And how all this going to be funded, I just don't know. And then there's a huge outstanding issue that nobody wants to address, and that's the question about the Eskom. And many of the other ones as well, but Eskom particularly. Eskom, the outstanding debt of Eskom is approximately 500 billion rand. They just made another loss of 20 billion rand. They're probably going to make another loss of 50 billion rand in the next financial year. They simply cannot survive financially with 500 billion rands worth of liabilities on their balance sheet. They need to reduce that. They need to halve that. And they just keep on kicking that particular can down the road. We need to get an answer. So where's this money going to come from? So I'm afraid I am very, very concerned. I think we're going to see a massive increase in poverty. We're already seeing that. And we've lost 2.5 million jobs since the beginning of the year already. And all those jobs, each and single one of those jobs were lost in the private sector. Not one single job was lost in the public sector.
On that point, Dawie, and the public sector is probably the one area where most analysts are going to look for those political tough decisions to be made, the trade-offs. And we did have the finance minister saying he wanted to put a cap and a freeze on public sector salaries over the next 3 years. Immediately, we saw COSATU and their affiliated unions throwing their hands up in the air saying, we're already at the bargaining council discussing the last wage agreement of a 3-year wage agreement before we've even started the next round. And it looks like the battle lines have been drawn. Do you see the political stomach to actually stick to the finance minister's cap on public sector wages?
Yeah, well, first of all, the Minister of Finance, he budgeted as if he's going to win this particular court case. He simply assumed that he's going to win this court case. We're still waiting to see what the courts are going to decide on the public sector wage increases, as an example. But essentially what must happen, and this is going to happen, let me make a prediction, and a very strong prediction. I know the following is going to happen. We are going to spend less on civil servants. Remember, we cannot cut on anything else. The only place that we can cut is on people now. We have to cut, and we're going to make people angry. And now either we're going to cut by actually cutting in nominal terms, or we're going to cut in real terms. What I'm trying to say is that the wage increases over time is simply not going to keep tread with inflation, and I've got a bit of a concern about inflation going forward. So there will be a reduction in the amount of money that we're going to spend on people. And remember, there are 21 million people receiving some sort of income every month from the state. And you can compare that with 12 million people that are working in the private sector, as an example. So I think that we are heading for some sort of clash here at various levels, but a very important clash that must happen. It's a clash between whoever is in charge of government and organized labor, particularly COSATU. And it is quite possible that we could see the rearrangement of the political scene in South Africa, and it's certainly possible that we can see the tripartite alliance falling apart, because we literally ran out of money now. So yes, the answer to that is yeah. I think it's quite possible that we can see some political changes taking place over the next couple, perhaps even soon, but perhaps even sooner than a couple of years, perhaps even within the next 6 months or 12 months or so.
I mean, that's certainly the feeling. If you read what Michael Sachs, former head of the budget office inside Treasury, is saying, he doesn't believe any of the plans in the mini budget because of those political trade-offs. And he thinks in order to execute on what is effectively an IMF type of austerity program, you're going to have to break up the broad church of the alliance. And he can't see that happening.
You just used the word austerity there. Let's talk about this word, the meaning of this specific word. Now, we have been seeing, we're going to see a fiscal deficit, in my numbers, about 17.5%, 18% of GDP in the current financial year. We're going to see the debt levels going up to 84% of GDP. That is no austerity.
Not austerity, yeah.
That is a hugely expansionary budget. And next year, they're not even planning for austerity. They're planning for another expansionary budget. So there's no austerity. Austerity is where you're actually cutting back on state spending. Austerity is where you're running a primary surplus, as an example. That is austerity. Or preferably, where you're running a fiscal surplus, a normal fiscal surplus. This is no austerity. This is This is actually a very, very expansionary budget, a hugely expansionary budget. And when the Communist Party and COSATU and those left-leaning economists are talking about the so-called austerity budget, this is certainly not the case.
Relative to what they're used to. And what did Thatcher say about socialism ending when you run out of other people's money? Well, that's certainly where we are at the moment. If you look at every rand of tax revenue government plans to spend, we need to borrow another 29 cents by the outer year 23-24. Since 94, the average has been around 1 Rand 16 to 1 Rand 18 in terms of every 1 Rand that the government spends. So the bottom line is we continue to spend money that we just don't have, and it shows in the bond market.
Let me show you, let me mention a couple of other numbers. Now, the total savings in South Africa is between 15 to 20% of GDP, roughly. We're not good at saving. The fiscal deficit, like I've said, is going to be around about 17% to GDP. That simply means that the state is borrowing all the available savings available in the economy, making us very, very dependent on foreign capital inflows. If we don't get that, then there's just no money available for the private sector. This is real crowding out of the private sector, and that's the reason why the bond market is doing what the bond market is doing at the moment. But where is all of this going to end? Well, we know that the Minister of Finance, and I think the President also mentioned that we're not going to see prescribed assets soon, but I'm not so sure about that because we've run out of taxpayers, basically. We've destroyed a lot of capital. Eskom is an excellent example, and they still are in need of capital. So who's going to fund all these projects? And I've got a suspicion that prescribed assets will be back on the table again. We're going to talk about prescribed assets, and there's proposals for the change in Section 28 of the Pension Fund Act. I think that's only the beginning. Perhaps the next move is going to be suggestions that we're going to swap the PIC's debt, the Eskom debt held by the PIC, to swap that into equity. That could be the first step in that. And eventually, we're going to see exchange control regulations. And eventually, this whole thing is going to enter high levels of inflation, because inflation erodes the value of money, and inflation also erodes the value of debt. And I think this is where we're going to end, in high levels of inflation. That means that expect further pressure on the South African Reserve Bank, say in a couple of months, in a year's time or so, because I think inflation is gradually going to get a bit of start rising a little bit, 18 months or so, and then the Reserve Bank will start tightening monetary policy, increasing interest rates, and then you're going to hear the politicians squealing. So expect further pressure on the Reserve Bank, and this debate about things like, for example, what does he call it? Call it quality easing, that, and the nationalization of the Reserve Bank, and changing the mandate of the Reserve Bank, those sort of topics coming back on the table again.
Yeah, modern monetary theory as well is all the rage, as we see with the US election. That's going to happen either way, and weakening the dollar. But I think what you've just painted is a picture that is certainly going to weaken the rand as well. So what we do see at the moment is currently a much stronger rand on the back of dollar weakness and what's going on with the US election. So probably a time for investors to start and look at offshoring some of their assets.
That's what I'm doing. I mean, I'm taking my clients' money offshore, because that's how you have to. Of course, there are many opportunities still in South Africa, but certainly one way of diversifying your risk is to make sure that you've got a substantial portion of your portfolio invested abroad, and that's indeed my advice to my clients. But it's not just all bad news. There are a couple of things that's still working very well in South Africa. The South African Reserve Bank is one example. And Lesetja Kanyagwe, I'm telling you, he's not going to roll over that easily. He's really going to put up a fight. So that certainly, without a doubt, is a silver lining. But there are some other silver linings as well. The currency is a very weak currency, probably the weakest currency in the world. We have very attractive yields on the capital market, and sometimes people underestimate the importance of having a liquid capital market, and that's what we have. So we've got a cheap entrance to foreigners. We've got very juicy yields and a very, very liquid financial markets that we have, and a foreigner can come in quickly, take a bite out of the apple and run out again. And that's what we currently see. So the moment risk on is on internationally, then people say, listen, where else can you get this kind of returns? And that's the reason why the rand appreciates. But over in the short term, but over the medium, longer term, I can only see one direction for the currency. But in the short term, a lot of volatility, and maybe that can include the rand doing quite well as well. But you're right. Make use of these kind of levels of the exchange rate of the currency to make sure that you're properly diversified internationally as well.
Dawie Roodt, Group Chief Economist at the Efficient Group, always, the rational voice, I should say, amongst South African economists, and not tethered to some of the more sunshine views that we see out of banks that shall not be named. Dawie, great pleasure chatting to you. Look forward to catching up soon.
My pleasure, of course. Thank you, Michael.